you're trading stocks, it's essential to understand what volume means. Volume is the number of shares that are traded during a period. It's usually measured in terms of how many shares are traded each day, week, or month. When you're looking at stock charts, volume is one of the factors that you should be paying attention to. In this video, we'll discuss what volume means and how to use it to make informed decisions when trading stocks. What is trading volume and how it affects stocks? Volume represents the number of shares that are changing hands at one time. Stocks which have larger volumes tend to attract more buyers. Shares traded at higher volumes are also seen as more desirable since it indicates that other investors are confident in the stock's value. There are different ways to measure trading volume. One popular method is to look at what is known as average daily trading volume, which refers to how many shares typically change hands each day on average. You can also look at what is known as market liquidity, which looks at what percentage of the total market capitalization of a stock changes hands on a given day. Why does volume matter when trading stocks? Volume matters in trading because it can be an indicator of investor interest or confidence in a particular stock. When volume is high, many investors buy and sell the stock, which indicates that they see value in it. It can suggest that other investors believe the stock will likely go up or down in price. Hence, paying attention to what volume is telling you when making trading decisions is important. Trading requires a lot of research and careful analysis, and volume is just one factor you should consider when making your decisions. One helpful tip is to use technical analysis. Technical analysis involves looking at different aspects, including volume and price trends, to predict what might happen with a stock in the future. With the proper knowledge and tools, you can use volume to your advantage when trading stocks and increase your chances of making successful trades. Here's a perfect tool to learn more about trading. Affiliate disclaimer: Moovmynt is supported by the people. When you purchase through links on our site, we may earn an affiliate commission that helps support our website and its content. Learn more. TradingView is the perfect place for beginners and experienced traders alike. Whether you're just starting or looking to improve your current strategy, TradingView has everything anyone could need. Check out TradingView today. If you want to learn more about trading, check out our previous video. What does volume mean in stocks? Stock volume is the amount traded over some time. Stock volumes alone are not indicative of the stock's performance. You can also see how people are buying versus selling. Through every trading session, a stock investor purchases or sells stock in a transaction, which leads to the overall volume of the stock for that period. So the information collected and recorded during the day is estimated, and trading volume is recorded the following day and the next. How does volume affect stock prices? The increased stock market volume could mean that investors are looking ahead, and stocks will likely increase in the future. One method of evaluating stocks is technical analysis. The method analyzes trending items and volumes to aid in assessing the stock market and determining trade opportunities. The volume of stocks is displayed on the y-axis. Analysts using technical analysis see volume as an indicator of market movements. Investors will view price changes as indicating more significant moves in the same direction as the volumes during and after prices increase. High volume versus low volume. One easy way to measure volumes is with bar charts, where bar graphs show the trading volume for specific periods on bar charts. Whenever bars go above the median, it can indicate high trading volumes at certain prices over the last period. Investor analysts use bar charts to determine trending and price moves upward. A rise in volumes when price changes are viewed as an important signal. The volume of stocks can be sorted according to trading activity, such as high or low volumes. How much is volume equated to stocks? How can we reduce stocks? A high volume means a high level of interest in the stock, which could indicate that it is likely to see a price increase. On the other hand, low volume means that there is not much interest in the stock, which could indicate that it is likely to see a price decrease. To reduce stocks, you can look for ways to minimize your trading costs and fees. Trading has ups and downs, and it can be challenging to stay on top of the market and make successful trades. This applies to both stocks and cryptocurrencies. When trading cryptocurrencies, it is important to keep them safe and secure with a hardware wallet. There are many hardware wallets out there, but there is one that we highly recommend. Affiliate disclaimer: Moovmynt is supported by the people. When you purchase through links on our site, we may earn an affiliate commission that helps support our website and its content. Learn more. Ledger wallets are considered to be one of the most reliable cryptocurrency wallet options out there. They provide strict safety measures that ensure no compromise during transmission, making them an excellent choice. Check out Ledger wallets today. To learn more about hardware wallets, check out our previous video. How volume is used in trading. Volumes indicate the strength of markets. There will be several ways of reading and using stock volumes. Stock price changes are seen as a reflection of what investors think of the company's stock. Investor sentiment will drive the market price, while volume can represent what the masses do when they buy or sell. All in all, trading volumes give us important information about what is happening in the markets and how strong investors' sentiments may be towards particular stocks. Volume analysis is useful for determining what investors think about the market and individual stocks. When volume is high, it could indicate that an asset is actively traded and may be worth further investigation. When the volume is low, this may suggest that there is little demand for a particular security. One way to use volumes is to compare the current volume of stock with what has happened in the past. If it's significantly higher or lower, this can indicate that investor sentiment towards a particular stock is changing. Ultimately, understanding what volumes mean and how they are used in trading can help you make more informed investment decisions. By paying attention to what is happening in the markets and what volumes are telling you, you can reduce your risk and increase your potential for success in trading. The average daily volume in the U.S. stock market is about 2.3 billion shares per day. However, this number may vary depending on what's happening in the markets and what individual stocks are experiencing. Higher volumes indicate that more people are trading a particular security at any given time, which could signify increased investor interest or excitement around a particular stock. Average volume can also indicate what kinds of trends might be forming in the market and what traders may want to watch for. At the end of the day, what volumes mean is that they are just one piece of information you can use to make investment decisions. By understanding what volume indicators are trying to tell you and how they work, you can use this information to make more informed decisions and reduce your risk while increasing your potential for success. So what does volume mean in stocks? At its core, volume is a measure of how many shares are traded on a given day or over a given period of time. It can be used as an indicator of investor sentiment towards particular securities and can help you assess what trends are forming in the market and what kind of information you should pay attention to. By understanding what volumes mean in stocks, you can make more informed investment decisions and reduce your risk while increasing your potential for success. Volume patterns and indicators. Volume is essential for many chart patterns. For example, two technical trading patterns incorporating volume include head, neck patterns and flag, pennant patterns. The ARMS index, by definition, measures relative volumes between advanced and declining shares of stock. A value below 1 indicates bullish emotions for these indexes, and a value below 1 indicates bullish emotions. The balance of trade is another indicator of volume. Low volume stock trading can often indicate that traders are apathetic about a stock, or it could be a sign of market saturation. In addition to market trends and economic events, investors should also evaluate fundamental data such as earnings reports and dividend policies when assessing what volume means for different stocks. By carefully analyzing these data points in conjunction with overall market conditions, investors can better understand what volume means for specific stocks and what this information may indicate about the overall health and future performance of the market. To learn more about investing, check out our previous video. Final thoughts. Volume is an important indicator to watch when trading stocks. By understanding what volume indicators are trying to tell you and how they work, you can use this information to make more informed decisions and reduce your risk while increasing your potential for success. Volume can be used to help assess market trends, investor sentiment, and more when evaluating what volume means for different stocks. It's important to also look at fundamental data such as earnings reports and dividend policies. By doing so, you can gain a better understanding of what volume means for specific stocks and what this information may indicate about the overall health and future performance of the market. Thanks a lot for watching. Disclaimer: Moovmynt provides educational content only. It should not be taken as professional financial advice.